Having had months of bearish news and sliding markets, global grain markets have recently found a degree of support. Firstly, there remains uncertainty over the area and production outlook for US maize. Following delayed planting in a very wet spring, development of US maize has failed to catch up, raising questions about yields and final production figures. And as harvest is likely to be delayed, there are also increased risks of frost damage. Sticking with North America, and the spring wheat harvest is also delayed, raising concerns about quality. Closer to home, while wheat yields across the UK and Europe have led to a large crop and a requirement to be export competitive, French maize yield forecasts are not so optimistic, with the EU Mars report forecasting yields to be the lowest in at least 10 years. Additionally, dry weather in Australia has also led to downgraded wheat production forecasts and removed some of the on-paper global grain surplus previously forecast for 2019-20. Yet while the global market has been receiving support, there remain risks to UK markets. Caught in a catch-22 of Brexit dilemma, UK cereal markets continue to face the prospect of either a rising value of the pound in a comprehensive deal scenario or the prospect of tariffs and market access restrictions. So while there are now some globally supportive factors for cereal markets, the longer-term outlook for UK cereal markets will continue to be heavily influenced by the political events. Oilseed markets too are receiving some longer-term supportive factors now. Signs of a softening of US-China trade relationships have translated into the soybean market, with recent purchases of US soybean stocks. Should US-China relations fall and return to significant soybean purchases from the US, then there may well be a drawdown of global stocks and provide support to the underlying oilseed market. Additionally, as the UK and EU is facing a large deficit in oilseed rape, imports are critical for supply. Yet as a traditional second major import origin, the ongoing lack of rainfall in Australia has led to downgraded production forecasts for canola, further tightening the global outlook for oilseed rape supply in 1920. Yet again, political events have shaped the direction of the value of the pound recently, and while there has been a recent support for global oilseed markets, these gains have not yet been able to filter into the domestic market.